in your portfolio, because I know that you invest in stocks, but you also got crypto in there. What's the makeup of your portfolio right now, would you say?
So at the moment, I have about 40% crypto. This normally fluctuates between about 40 to 60%. I try and never let it really get over 60%. And if it does reach a point where it's about 60% or looking like it's going to head over, then I begin to start trimming some of the profits off and diversifying that into either stocks or ETFs. The ETFs I prefer to go into are more index-based ETFs.
Hmm.
So ETFs that are actually invested in, say, an entire index. I just think it's a lot safer to do it, and it's a nice hedge to the cryptocurrency.
Hmm. Interesting, actually. So heavily weighted on crypto. So you're running your own asset allocation set essentially with a strategic view of you don't want the weighting to exceed anything. Just
Yes.
explain that principle to people, because that's often something that I talk about as something that should be employed within an investment
Mm.
proposition or portfolio. And I'm not quite sure that people understand why that is a lot of the time. Why do you have a 60% cap and why do you trim it?
The main reason, and I think you've probably spoken about this a few times. If you have spoken about weighting, is it's more to hedge your risk. Just because you are hedging your investment doesn't mean you're hedging your overall potential return. I think that's a little bit of a fallacy that some people may have, is that lower risk means lower return, and that's not always the case. Is
Mhm.
diversification just lowers risk, and it doesn't necessarily have to lower return. So it's about not having all your eggs in one basket. And I do this with crypto as well. I've got specific weightings on specific cryptos, where, say, for Bitcoin and Ethereum, I may have a higher weighting because I see it as a more stable cryptocurrency. I might not do the same for, say, the riskier cryptos, like Cardano or Zcash, or the smaller cap cryptos in general. The main reason for this is, if, say, some negative news comes out with regards to Ethereum or Cardano, then that's going to dramatically impact that specific price. But the entire industry could still be bullish. And
Mhm.
then you may see a slight knock in one cryptocurrency, but all the others are going to continue going up. And the same principle is also applied to different asset classes. So you can diversify and choose different weightings based on the asset class. So the reason I cap it at 60% is, once I start going over 60%, then I'm way, way too overweighted in crypto. And I'm trying to limit the risk exposures for my copiers, so that if something does happen, like we saw with this recent crypto correction, it's, I think, the second largest crypto correction on the books, other than 2013, which is a significant drop. And even though it might not have been caused by extremely bearish market conditions, it was more like just the liquidation of too much leverage contracts, as well as a lot of fear, uncertainty, and doubt within the market itself, then my copiers are protected, because before that, I actually lowered my general crypto exposure. I sold a lot of positions at the highs, and then looked and started averaging down my buy-ins as the price began to fall. I mean, I still obviously had a negative month last month, as I'm sure pretty much every crypto investor did
Mhm.
have. But the net impact was actually far lower than it could have been. Um, so I think it's very important for people to also understand that just because, say, you see a drop in prices, doesn't mean it's a bad thing. You need to compare yourself to the market and say, okay, well, Bitcoin dropped, say, 55%. Did my investment drop 55%? No, it didn't, because I'm hedged. I'm hedged in various stocks. I'm hedged in various ETFs. And this is the importance of that diversification, and being in a situation where, yes, there is a drop in the market in general, but you don't have to feel the full weight of that. And you can actually take advantage of that drop to lower your average buy-ins and end up at a better position than you were previously, when those prices reached their previous levels.